Okay, hi there, guys. Who are we getting today? Just let me know if you hear me loud and clear. We'll get up and running. Lauren, how are you, mate? Hope we're all using our toilet paper sparingly. Oh, it's absolutely nuts, isn't it? More worried about the toilet paper than the market. A bit of a strange one, strange events, don't they? People, g'day, Greg. How are you, mate? Long time no hear, I guess is what you'd say. How was it up in Queensland up there? Find the old toilet paper. I could not believe it when I saw that. Um, I thought it was a bit of a joke, and we've since moved from where we are, more out in the country, not country as such, but moved a while out, and you thought, oh, it was all a city thing in Melbourne. But no, I walked around the corner to get some toilet paper, and it was empty, completely empty. So it's amazing what people do. I mean, watching too many movies about zombies and things like that. The apocalypse. There was a crazy day yesterday. That's why, obviously, hence the picture on the screen there. Oh, is it? I've seen that it's a bit of panic over US too. I think maybe in England, but they seem to be, from what I hear, they're going for different things. It's not so much the toilet paper as other things. So I mean, I remember I was going shopping and you see the toilet paper was the first thing, and then slowly then you're running out of pasta or yeah, just weird, sort of weird things. I find kind of strange. It's not like no one's going to stop people going to stop making them, and Woolies going to stop stocking the shelves. So anyway, the weird things we do. So markets yesterday pummeled last night, which I think that move comes on the back of basically Saudi Arabia giving the finger to Russia, and that move down in crude oil. So anyone that doesn't know, obviously, well, you know by now, but just to recap, crude oil obviously tanked on Friday night a bit, and what they were obviously that's because of the market meltdown. You always go to worry about demand for oil and things like that, sell into it, and then over the weekend, I think OPEC were meant to come to some sort of agreement. Russia and basically Saudi Arabia um, to cut production, and I think Russia said no. So Saudi went, all right, we'll cut it. We'll just load up then. So I think the dollar. I'm not sure. I mean, someone quote me on these facts. I think the break even per barrel figure for Russia's, I thought it was somewhere around 45, $50 a barrel is their break even, whereas Saudi Arabia is obviously, I think it's below 20 for all I know. So they can stay profitable anyway, even with lower prices. They're one of the few nations that can. So they've just gone, all right, you won't help us out. We'll smack it. And sure enough, over the weekend, that news has come out. $10, a gap down of $10 on crude oil yesterday. I think it broke $30 now. I haven't seen that level since the GFC, the panic of the GFC, and it wasn't straight off the bat. Now we've essentially been in GFC type scenario only a couple of weeks. And I remember sitting that it was the end of 2007 when it kicked off. Lows were made in 2009. So you had a full year of market just getting hammered, over a year. I don't know when exactly oil made the lows around the 30 below $30, but it went from I was trading options on that up to around $140 a barrel or something, 145 when it went nuts, and then just started getting smacked down. It had a big bounce and then got belted down to below 30. Now we've done that. We've has not recovered. Oil hasn't recovered obviously since to those same levels. Obviously a bit overextended, but then got hammered like 27. I think it hit 26, $27 a barrel um, yesterday. So yeah, lack of a better word, that was a pummeling. So we'll just go over this. Um, so we'll talk about that today. Just have a look at. I'm just going to go through some general charts because I mean everything's down on its knees. Even though we've bounced, I think we've turned the Aussie market was down 240, 30 something, 220 on the open, and then it's rallied. It pretty much as soon as it opened, it started rallying from there, and it bounced straight back from those lows and I think it went green from last I saw. It was up 12 points. I just had it up, didn't I? 87. So that's a decent, it's a handy bounce. But I'm 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 a firm believer you don't get a V-shaped recovery. So if you think this is all over, and I think you'd want to think twice about it. Any funds or anything like that, basically the people who move the funds that move stock in and out of the ASX, they can't just go load up down here. I mean, they're not buying, get one basically half an hour buy and buying it straight back up again. There might be a lot of bargain hunters. You get a bit of a spike, a massive short squeeze, I would suggest, in the futures and everything else. But basically across the board, there's a big short squeeze going on at the moment on oils, I think, bouncing. The Dow is bouncing. The Hang Seng was bouncing last I saw. So a bit of a short squeeze there, a bit of a short squeeze in the ASX on the futures. And of course, that will come to a halt. I don't know if anyone remembers the GFC, but I remember it got hammered initially, and it was a big move south, and then it basically had a 50% recovery. And we used to have morning meetings, and I remember everyone saying, "Oh, it's time to get back in. You're stupid if you're not back in." Da da da. And that's just a mentality. Don't miss the boat. But then we all know what happened: a 50% retracement, and then it got belted below 3,000, 2,700 or something from about 58. So I'm not saying all that's going to happen, but I'm a firm believer you don't see a V-shaped recovery if there's not some sort of consolidation before we start going higher. I'm a bit of a I'll believe that it's believe it when you see it, and I'm happy to give up these gains if I'm wrong, because a lot of the stocks are just coming off low. So I think there's going to be some bargain hunters, whether they get squeezed out soon or whether there's a bounce over a few days. Who knows? I mean, the same people that are buying now probably bought a few days ago when we're up at, well, I don't know, 50. What were we? On the Oaks up here and 6,400, and they've been belted down to 5,700, 56 even. So if you're buying here, all fair enough if you can get a bounce, but just be very wary that you don't come in, you're up slightly today, and then tomorrow, the next day, you're all cocky, and then the next thing you know, the US goes 2,000 points down because you don't get a chance. You'll get gapped down on the open and get caught out. So I think you want to see some sort of consolidation or at least a high low to work off on the ASX. I don't mind it sort of chopping around here. Say what we saw back, well, this is just as an example, when we saw this belting down here and it started, really starting getting supported. You can see that, and support doesn't come in a day; it might come in weeks. So I'm always a big believer in that. And if that's going to happen, a big V-shaped recovery, I think there's still some volatility to come. And if you have to sit on the sidelines, just reassessing, making sure you're getting good quality shares, so be it. Oh, true. I haven't got there yet. Thanks, John. I think it's you that always reminds me every time. So you can see what I'm talking about. That's let's just get the 6 months. I'm not a believer that that's just going to bounce straight back up again and show's over. Up we go. There's obviously bonds have got an issue. The widening spread makes any companies or corporates that have to refinance, their refinance at just a really crappy spread at the moment. Nah, John, I think you do well, mate. I think you do well. Yeah, so that the bonds, anyone sort of having to refinance, I think it's the repo market or whatever you call it, is they're getting hammered a bit when they're having to refinance their debt. And companies that have got massive debt levels, I think a lot of oil and gas, maybe explorers, producers, whatever, have quite high debt levels, meaning that if they have to refinance and the cost of their debt is going up, then that's a bit of an issue. I know interest rates can go down, but that's that's a different market altogether. Who wants to lend somebody money if the market's going to crash? You're just going to be wary of that. So I think that's obviously a bit of an issue. They were talking about, obviously we know that, say, the oil down here, you'd hopefully it's going to be beneficial to to the tank. But I'm such a skeptic. I just think that they're going to come under pressure. Why would they give us? They would keep trying to suck it out. They know something we have to have. Petrol's something we have to have. There's no way around it. People are going to have to cut back a bit, obviously. But I wouldn't expect, just because the crude's down at $30 a barrel and the Aussie hasn't really moved too much, it should be cheaper for us. It doesn't mean it will. So there's a lot of flow-on effects to oil. So if you've got a company oil as an input, lower prices means your cost can be down and it could be passed on to consumers, meaning they should be spending more, hopefully supporting the economy a bit, but it's a fear-driven market. So there'd be people tightening their belts quite a bit. Wouldn't expect there's going to be much change from the consumer side to add to inflation, because the US now are concerned about inflation taking a hammering because of oil prices, which is all fair enough. And the 50-point cut they had just recently was meant to sort of give it a bit of a nudge, and then all of a sudden oil drops like a stone, and they're caught out having to potentially cut another 50 basis points, another surprise cut, or maybe the next meeting, or some sort of stimulus package, because if they can't jolt inflation, or at least keep inflation up, they're going to go into contraction, and that's going to be a real problem. So I think that's what the market is sort of trying to factor in, what's happening to the global stage with regards to trade, how that's going to play out. And I think everyone talks about the coronavirus. You see it all over the news. Coronavirus has done this. It's a trigger. If that wasn't a trigger, it was going to be something else, and guaranteed we were going to come off sooner or later, whether it was now or later on. We're higher. It doesn't matter. Markets like this just can't keep going up. We all know that. So you sort of have to weather the storm at the moment. And we're happy enough with that. We've got no positions. We've got stopped out of, was it TPM? TPM yesterday. And there you go. It's back above 8. So it stopped at 8. Not so bad, but a good, healthy sort of bounce back today. But I'm happier being out of that, booking the gains. We took a partial and got a clue somewhere up here, 840. And then we just got stopped out of the rest at 8, in from somewhere 720, 10, somewhere in here. So 720, I think it was. Handy, that was our last one. Booked that gain, and we're just happy enough to sit around and watch. I mean, if you go and look at, I'm just going to find a lot of these shares. Go and look at this is intraday. Where are we daily? A lot of these shares, not so much AAC, but APT belted down. Big bounce back today, but you're going to get those bargain hunters. And then we got Lee Creek, forget about that. FMG belted. Look at some of the miners, BHP. What do you really want to buy? You're trying to, catch a falling knife. I find that's not trading. I mean, don't get me wrong. You could get lucky and we don't see this price again. That's great. But what if you thought that up here, we've come off quite a bit. We're down at 38 bucks. That sell off, I buy it here. Oh shit, hang on a sec, I buy it here. Oh, hang on a second, I buy it 32. And all of a sudden you're loaded to the hilt and we're down at 27 bucks. Don't tell me you're not going to be stressed. And it's not the price that'll probably drive you to selling. It might be the stress and the fear and all that sort of stuff. All of a sudden, when you're under pressure, if you've been buying every dip you've seen because you think it's overextended and it gets further overextended, you might just go, I want to stop the pain and suffering, basically the mental anguish, and you close out, and you could potentially close out at completely the wrong time. That's if you were buying on the way down. So I don't see any reason why people are saying, you might find everyone on Twitter, everyone will tell you how they bought the dip at 27. Well, they probably won't tell you they bought it all the way down here as well, and they're loaded to the hilt, and they could get lucky, or they might find they sit on a massive loss for the next year or so while this recovers. So that's why I'm a big fan of just staying out. Let it reset. Let the market prove to you that the weight of numbers are on the buy side, rather than there's still going to be lingering fear. Anyone who's rode that all the way down with some positions, if they get a bounce and we start looking tentative again, the news is going to keep pumping that massive correction. We've got further lows to come. If that's what the news is going to be, all that fear, drumming up the fear, you're going to sell out. Okay, so there's going to be probably people that later on a bit of a bounce might sell into the first bounce they get, again, to ease the fear of a massive loss that could get bigger. I hope that all makes sense, but that's, that to me, it's psychology now. Don't forget about levels, forget about this, forget about that. It's psychology. There was a support zone through here. We went blasted straight through it. Hell, blasted straight through. There would have been a bucket load of support levels. We just completely wiped them out. I think the ASX, as of yesterday's close, where it closed yesterday, was back at the same level from the start of 2019. That's a year's worth of gains, over a year, wiped out in a good week or two, for a couple of weeks. And one day yesterday wiped out about 3 or 4 months of gains in 2019. So it's really, what do they say? Up the escalator, down the elevator, or pretty much down out the window. It's just a free fall. So you can forget about this as a rational market. Buying off support. I think I was talking about, did a stream this morning about indices and people buying on support, going, support down here. I'll put my bid in there. If it gets down there, it's a bargain. Forget about things being a bargain. Things could always get more of a bargain. Like I said, if you can honestly tell yourself you didn't think it was, you bought here because it's a bargain. I'm a big believer that most of those people would probably have bought way up here at 3,500, 700 points up from where we are at the moment, give or take. So what am I on? I'm on BHP, so forget about the index. So we're talking about the index. So if you were, like I said, you bought this bargain here, you might be tooting your horn thinking you're a legend, but you probably bought up here too. I just firmly believe that anyone that's going to dive in like that without really any confirmation of what the market's doing, it probably does it time and time again, and that's real. I reckon it's just a hard way to trade, to consistently trade or consistently be profitable. Um, so that's it. That's it for me on that. We'll go over some of the indices. We'll go just what the Dow's doing. Is that what I wanted? Yep. We've got the old trading view. So if you want to have a look, I've got on trading view, did a stream this morning. I'm going to start doing more streams on indices, more of a global picture, a macro picture of what could be happening, obviously, with oil, gold, and all those sorts of things. Anyone saw gold last night? Geez, it wasn't a safe haven at all. And I think it's down again today. So let's go have a quick look. I don't know where exactly gold is. This is delayed, by the way. You see how we pushed up through the highs, go down to the smaller chart, 4-hourly chart, pushed up through the highs, and then the next few, candles kept rejecting that high around, was it 1690? So that would have caught, with that kind of move up, and that was basically on the open of Monday morning, the first thing when it came online, it gapped up on the open. A lot of people bought gold, just traditionally bought gold because of, the market's meltdown. I don't think it's working yet. If it is going to be a bit of a hedge against a market meltdown, why isn't it now? And this kind of rally off this low, once we got smacked down here on a Friday night and then rally pretty much the next few days straight back up again, that's unsustainable. And you're going to think no one with that kind of V-shaped move, you would expect some sort of pullback. That's why I'm expecting it to break back down below 1658, take some heat, and that there is a bit of a flush. So a flush of the highs, people are going to buy the gap. When it's gapped up, they bought above the highs on stop and they think, this is great, the market drops, and then all of a sudden gold's dropping along with the US last night. Gold was actually getting sold off when the US was getting sold off as well. So when you're down 2,000 points on the Dow, or, when it was going down to be down 2,000 points and you're seeing gold go against you as well, things just get painful. And you're wrong across the board, which really can start to hurt and really start to impact on the psychology. So yeah, I don't think gold, I'm looking more for something like this, maybe bit of a correction and a bit of a flush, and then you might get gold starting to push back up again after a good solid flush out of those highs. But because the longer term trend is still way back, so it can have a decent pullback, and you can see that flush out lower that we got a couple of weeks ago, or probably a week ago. That flush lower really is just holding that trend line back up again. So that would have caught a lot of people that bought it here expecting it to pump up, got flushed out, back up again. They bought it again. They could get flushed out again. I think the market's probably got, or gold at least, has got something like this action, on a bigger scale. And if that's the case, if that's going to play out, then you rather buy the big dips and look for that big flush out, look to reset and go long there. And if it doesn't get stopped out, okay, you either get stopped out at a small gain, small loss, or whatever it is, but don't take any big risks on it. Expecting the market meltdown is just going to be a buying opportunity for gold. I think each individual, like the DAX, even when I was watching the Hang Seng yesterday, it wasn't really moving down too much. It did later on, but it wasn't moving down too much. When you can see the Dow, Crude, all these, our market going into meltdown, it was still trading. I think they got a short band. I'm not sure. That might have capped it, and people were just looking for a buying opportunity and just sort of waiting on the sidelines. But it was not doing the same kind of price action. So each market you've got to treat individually. I mean, I know there's correlations between them. Sometimes they don't work and you don't want to get caught. I mean, if it looks like a buy, you buy it. And if it doesn't correlate and it's proven later on, so be it. But if it does, great. If you just buy it for the sake of it because the market's going down, that you could be caught in a massive flush. And if you can hold through that, great. But if it doesn't turn into a flush and it turns into a massive sell-off, it's a different story. So that's gold. Oil. Let's have a look at oil. Oil's down on a massive level. We'll go back to the weekly. You can see that on a weekly now. So that was the GFC. We got to 147, and let me just see where it sold off to. So it pretty much come off. So as soon as the market started going to meltdown through the GFC, oil just kept getting battered all the way down here, and we got down to, I think, 33. I thought it was below that. All right, so you can see, let's make that a bit better. You can see it's touched down there way back in the lows at '09, so it's pretty much around when the overall market started turning. Punched back up, felt a major lower high around the 110 mark. You can see through here, straight back down to that zone, washed out that low, but bounced again. But basically, bounced within that zone, just below the lows. It was really, in context of this overall chart, that's just a flush, that's a washout. And then we started holding this inside level at 42, which I actually thought was going to hold up. Bounced again back in October last year, made another lower high. So this big contraction lower is still in play, and the market has then held again at 66.70, say, flush lower, and then we gap down on Monday, straight back into that zone again around 30, and it is potentially holding. So if we start dropping down our charts to see what action we're going to get, it could be a zone where it start to lift from here, and it could close the gap back to 42 thereabouts, which would be a $10 rally. So you're going to get you would expect some sort of bounce into your oil companies, your energy stocks. You probably would expect some sort of bounce there, but there's no reason that if that starts consolidating down here, chopping around, expect a further sell-off, or at least a further flush through that low. And I don't know if I would expect that or not just yet, but I think these sorts of massive things with, say, OPEC and Saudi and Russia, they take a while to actually filter through. So if they're going to take a while to filter through, they might get some more nervousness, especially if we don't start lifting from here. So you start to see a good run up. If we start to see a good run up, great. If not, could chop around here and flush the lows again, and then everyone's going to be caught on the short side. And I would expect that to flush the lows and then bounce straight back up again, sort of like what we drew here. But I'll be looking, if I want to go low, it's long, sorry, sort of over the medium term, short to medium term, go long is looking for that higher low to work out. And then it start to lift back up, and it could stay within this range. You might find that this is a key support zone around $30 that every producer's happy to defend. They see it down here, they want to start dropping production or cutting production to keep that level intact, that support zone intact. If that's the case, I'll be looking for that higher low, maybe bounce straight back to 56, 50, 60 zone, back up. But we'll see how that plays out. I mean, again, those oil companies have to start showing some signs of they agree with that sentiment. I mean, if they're just heading south and this crude's starting to go up, forget about it. Just trade crude itself. That's what I'm looking at in oil. I mean, everyone talks about a gap close. Gaps, yeah. I don't know what the stats are. They're saying 10%, 90% of gaps close. That's fine. But how they also close after a massive tumble and a further tumble, that makes sense. So market could chop around here, consolidate, go a lot lower, go to $20, $25 before we get that gap close. So don't just buy it here expecting that gap close. All that sort of stuff. Again, the market has to prove to you that it's willing to bounce. And even this action, that sort of spike down this morning, was it this morning? No, that was yesterday. I'm on an hourly chart now. That spike down, that recovery, that flush back up through the highs, it got sold off again. So this here could be a prime area to get another lower high. If we're going to get a lower high, you'd start attacking $30 again, even attacking back down to 27. And if it starts really getting a run on, it could go blasting down. Or it could just continue, like I said, continue to chop around. Well, that wasn't the world's best picture, but I'll just draw that up again. Whoops. So we might get just something like this and then chop around again. So we'll have to wait and see. I mean, if it starts holding up like that and it's volatile, but you can see buyers are starting to soak it up, any sort of buyers soak up that pressure on the downside, then yeah, that would mean if you're short into here looking for that to take out 28, you're going to have to cover. And if you're going to cover, it could be a good short squeeze. It could take us back up through 34, 35, and that could be the gap close. We'll wait and see. I like saying that. Wait and see. No one knows. If you think you know, I don't think that's the best trading technique. Guessing, in other words, guessing long or short. Wait till the market shows you what it's going to show you, what it thinks it's going to do, or what it expects to do. Back to the daily. Now, what I was talking about this morning, really drag these out. This is a big S&P. That big S&P is still on a weekly uptrend, and this is a massive flush. Everyone knew we got overcooked, but all this furor, everyone expecting a big sell-off. This could just be a correction back to the mean. You know, when we're talking about the longer-term weekly macro action, because all in all, we've got to remember if they keep cutting rates, funds that have cash, they don't just sit in cash. I think funds might be struggling to sit in 10, 15, 20% cash because they're mandated to be in the market. Now, if they're mandated to be in the market, super funds, all that sort of stuff, um, they have to start going in. Where are they going to put it? Potentially straight back in the stocks again. This big flush out, it gets reset, and we could hold that level. Um, this is a big S&P anyway, and that's going to have the flow-on effect to ASX. But if they start coming back down, testing out, it's going to be every mum and his dad just flushed out of the market. And it starts to reset around 26. It's 150 points here. It could do that tonight. The way it's going, it could bounce off there. And if it starts to reset there and starts to consolidate, we might just be a decent pullback for that weekly trend. Or we could be, these are all the scenarios. All I was trying to do is trying to plan out what may not happen. Where is it? Fibonacci retracement. If that's the case and we sort of head down here, we start bouncing off that zone, it could just be a 50% retracement, everyone thinking it's all over, and then we have a massive correction. But until that level's broken, that longer term uptrend on the weekly, then for the moment, I'm just going to play it as a bit of a flush. A big flush out. Everyone knows we've got the coronavirus, we're worried, we're buying toilet paper, all these sorts of ridiculous things. The world's ending again. It ends every few years, doesn't it? Comes to an end and just proves everyone wrong. So we keep going through the same cycle over and over and over again. And potentially that's what's playing out. If this keeps heading south and we start to find some support down here, that's where you could expect a bit of a flush lower and then bounce and then consolidate and go. Again, if I'm looking for that higher low off that zone, that's where I'll be looking for the very minimum, potentially a 50% retracement of that move down, which could be, quite a hefty move. If this is the case, if you go from say 2,600 back up to 29, that's 300 and something points, 350 points on the S&P. I don't know what that would equate to on the, am I right? Am I wrong? 26 up to 29. Yeah, 350 points there. So that can equate to a couple of thousand points or more than that. 5,000 points in the Dow, which is pretty good. You can make some money out of that, easy. So if that's the case, that's what I'll be looking for. And then just, every day as we go, see what the story is, what's the main concerns of people, what's the news saying, which way they're trying to drive it. There's coronavirus over, they've got a vaccine, all these sorts of things. Imagine if they come out with a vaccine tomorrow, bang, this thing will just rocket, I would expect. But everyone's still talking it getting worse before it gets better. NASDAQ, I think longer term, it's same sort of scenario. You can see that was going near vertical. So anytime you go near vertical, you're going to have a deeper correction. You just have to, because people's psychology is to revert to the mean. I'm a big believer in that, statistics, whatever you want to call it, that reversion to the mean style of trading. If that's the case, we could have a decent correction still on the NASDAQ and still be in an overall uptrend and have to reset. We could get something, this big flush out, pop, look for your higher lows, and then we have another big run up again to all-time highs through 10,000. Dow, much of the same scenario as a big S&P. You can see that's still in a longer-term uptrend. I can show you that right from 09. So that 09 low, the end of the GFC, basically, I think it was March 09. It's been rallying since, and that's the trend up. This is the longer-term trend up, that bull market, and it's still, if you're looking at it that way on a weekly basis, it's still intact. So just because the news will talk about a recession, they'll talk about this, that, and the other, because of the equity markets, because we've had a 10, 20% drop or whatever it may be. I don't know what's that, probably 20% more. A move off the highs, they will be talking it up, but realistically, it's just flushing out a lot of late buys. It's the same sort of process we talk about all the time on your smaller scale. You can talk about this intraday, that big flush just to keep your weak hands back out of the market. And then, we reset and start going again. But in saying all that, there's still potential for that to flush down a lot lower. We could flush all the way down, take out this low at 2021, 680 thereabouts. Take that low out, go down to 20, 21 even, and then bounce. If that's the case, that's what, a couple thousand, 3,000 points from here lower, which again could be done tonight, the way the market's going. But I don't think it's going to happen tonight. I wouldn't be surprised we get a good bounce tonight. So that's those markets. So you look at the DAX. I think DAX, a big flush out of those highs, the recent highs, into all-time highs, and then bang, we got pretty much massacred since then. Even that, longer term trend is up. I don't know if this is the same. I think it's sort of broken down. We'll just see. That's a bit choppier, but depending on what you want to say your trend is, if that's the case, it's still it's a good level to hold up around this. I'll just draw that out around this 10,300. We've got a little bit further to go. We could wash that out, get down to below 10,000, then bounce, but still hold that longer term trend up. And even longer, it's still up. So when you get into those highs and everything gets extended and everyone expecting a bit of a sell-off, you're bound to get a sell-off. I think that's why it's been so hard and fast, because it's gone up so hard. And the harder it goes up, the more talk is a correction. Everyone's expecting it. If you're expecting it, you're quick to get out, or you should be quick to get out anyway. So what I drew up here is if we get this kind of, and this goes back to the ASX, if we get this kind of grind back up again, then that's where I'd be concerned that we're going to get smacked back down again. But that's just, I just drew that up on the DAX, but basically across the board, the DAX will be obviously linked to the US and global markets, what's happening with trade, China, all these sorts of big macro themes. UK, I mean, look at that. That's pretty savage, but it's just giving up. All these people that bought it the last few years have been caught out, and it really struggled. So it was struggling before the sell-off. It was struggling to get back up into all-time highs. So it was big resistance zone up here. Brexit's got a lot to do with that, obviously. But yeah, if you're trying to buy it, look for the US to kick on. You want to go with it. You're expecting the FTSE to go with it, and it just doesn't. Sooner or later, you're going to have to call it a day. And that's pretty much what's happened. So FTSE, I think it does a lot of this. Pop back up, fails at the highs, goes back down and test a key low, pop back up. I'm expecting to get down at least a few hundred points more to test this low, about 300 points more. Let's see what happens about that. And generally, in a fear-driven market, you would expect it to flush that level and bounce straight back. It does it time and time again. You can see here, double bottom, in here roughly. Didn't really do it before. It flushed out down there, bounced back. But those sorts of major levels, it does it a lot on the FTSE. So if that's the case, we could be finding it. We'll see what happens around, say, 55, 56, 55, 5,500 on the FTSE. So they're all coming into those levels, but we're just above those levels on pretty much all markets. Now the ASX, I really should just clean this up a bit, shouldn't I? Drawings. All right, on the ASX, if this is our zone in here, we're a bit tentative that we could have broken it, but the way we've rejected today, on the weekly chart, the way we've rejected today might be, and again, the market loves to flush. Don't forget, it would love to flush the levels. Fear is enough to, just because we've got a support line here doesn't mean that the market has to respect it, but basically, if it's flush below and finishes above, yeah, that's a good sign that maybe we're going to start holding, and this could be a zone to hold longer term. Doesn't help that everyone's been cleaned up on the way down here. Well, most people, a lot of people have been cleaned up on the way down. But again, that same sort of scenario is holding that longer term trend up. So we just got to remember that in the back of our minds. The fact that we've got through that high was a bit suspect. We plowed through those highs and started failing. Way up here, that was a good bit of a sign where it's getting stretched. I don't like the fact that we took out this low either, 68.90, when we sort of pushed up the new all-time highs, straight back down again. This low here, you start to question things, and obviously come crashing down since then, but ASX, a lot like everything else. So any questions there, guys? We can get into some stocks if you want. You can put some up if you like. Just trying to look at other markets. Aussie dollar, obviously well connected to everything that's going on. That's gold, sorry, a lie. Aussie dollar. Look at that spike. Did anyone see that yesterday? That was a 300 pip smacking. Absolutely spiked lower. I don't think there was any numbers. It was just around midday, 11:30, something like that, when the Aussie got belted. It went from about, what, 66 down to 63, well, down to 63.13. So 300 pips and then straight back up again. Going on the half an hour chart looks a bit more impressive, but look at that. Bang, bang, straight back up. And then gained all that ground. And that was on the US dollar, a bit of US dollar strength. As the US dollar went melting down, as soon as we hit the start of the, well, roughly the start of the US session at 1:30, the Aussie got sold back down again. I think the US dollar got sold down from there as well. So interesting. That's the Aussie market. Sorry, the Aussie dollar. It's finding some selling, but really that longer term trend is still, go to the 4-hourly chart, still down, still under pressure. The sort of trend line I've got going at the moment is it traded back up there, reconfirmed it again, but that was in line with this zone as well. So there's a bit of confluence there. Retested that zone, it's failed, so there's potential more downside on this, on the Aussie. It could work its way back down again. Again, Aussie completely linked to China. Does anyone know exactly what's happening China at the moment? Apparently I've seen some bits and pieces about them all. Everyone's heading back to work and they're all good. They're back into production, the economy's kicking off again. Or they're back to the usual. Does anyone know a bit about that? Which could be some news that could help to sort of find, for markets to find some support. Just so that's still going to be linked. If coronavirus keeps getting worse outside of China, everyone's going to be suspect of what they're doing, the numbers that come out of China. So I think a lot has been factored in with this complete sell-off meltdown recently. All right, let's just see. That's the Aussie. Euro keeps playing high. Look at that Euro bounce. That's a massive bounce. Big flush of these lows. I mean, if we go to a different chart, I'd probably say something differently, but big flush of those lows for this almighty bounce, and that's extended, really extended. But who wants to short that? Again, you don't just short. You short into weakness. You don't, and buy into strength. You don't short into strength. If that makes sense, short into a lower high, not the highs. It's nuts because it's just the ego trying to trade. Admittedly, we all get caught out doing nothing. I got caught out a bit yesterday. Fair few trades in the Dow, and it ended up flat or down slightly after quite a few trades. Anything I got a long on would kick off and turn around and retrace on me. Anything that was actually short did the same thing. So it was hard to get an each way bet during the day session anyway, after that big gap down. Today I made a bit back on that Dow, but only 80, 90 points, I think it was, something like that. 90 points. So, I mean, that's handy, but all right, let's get over to the ASX. Let's just have a look at some charts. There's not much in my mind to be looking at. So we just bounced up over 100 and straight back down again. So very, very volatile at this stage. There's still quite a bit of volatility around CBA. Big bounce today. Westpac, big bounce. I mean, there's something to be said. I know a lot of people trade sort of overnight. There's something to be said about buying into the close if it's showing some strength on some of these stocks, some of the good ones, because if we have a good rally in the Dow overnight, tonight, a good bounce back, like it's setting up for potentially. I mean, I don't like doing it because don't forget, we could be getting set up completely. There's a bounce in the overnight markets for the US, which is now. Overnight markets bounce and open in the US, they get slammed again. And then we open up tomorrow morning, we look at it and go, oh, SPY's down another 100 points. And then we gap down on the open again, everything gets cleaned up, and then we bounce. I mean, you don't know what's going to happen. I really find that a harder way to trade. I like to have access to my market, as in, if you're trading the futures, for example, it's basically 24 hours and you can react to something that happens overnight. But buying stock when it opens again at 10 o'clock and you're at the whim of what's happening in the US and Europe, yeah, I'm just not a big fan of that. But anyway, I know a lot of people trade and it does work. I mean, this say NAB or CBA or the banks hold up here, even a lot of the other stocks, if they green on the day, rally from low to high, finish on their highs for the day, there's a good chance that if it does bounce, which I would suggest is probably higher rather than lower probability tonight, bounce DAX, Europe, there's going to be some bargain hunting. And if you didn't sell yesterday, surely, that move down of 2,000 points when you knew it was coming has cleaned up a lot of long positions. So how many more people are left to sell? That's why you probably could expect a bounce and those short squeeze more than. And I like to see buyers are coming back in. I like to see a short squeeze at the moment because buyers will be coming back in when we see those high lows hold a key high low, not just green candle today, red candle tomorrow, then another green candle. That's not a high low. You want to see a couple of consecutive days of green, get sold off. When that second wave comes, another wave of selling comes in, it gets soaked up at a higher level. That's where I would suggest that it's buyers starting to step back in again, as opposed to a short squeeze, which could go another couple of 100 points. So where was I? So yeah, I mean, there's a bit of a bounce going on. We're only up 40 at the moment. Let's just look at the ASX intraday. Yeah, decent bounce. But again, that 30-minute chart, we could sell off in here and end back down below 5,700. Another 100 points from here down 50 to 100 on the day. So we'll see how this goes into the close. I think a lot of it just see what the US does in their overnight markets, what we do coming into Europe session. Like I said, I'll be betting on a bit of a bounce, but I wouldn't be trading it. I'm not going to trade it. And I think it's going to be linked. If crude doesn't bounce, starts to head sideways, or potentially go back down and test the lows, I wouldn't expect a bit of bounce on overnight markets, but we'll see. There's still a lot of shares that, under the pump. I mean, look at your miners, Mount Gibson. We had that. Lucky enough, got out up here somewhere. Straight back down again. Look at Crude. That was savage, wasn't it? The Crude we had, always forget, somewhere in here, I think it was $1 something, got out, took a partial and got out somewhere on this first pullback. And it just kept going south. Look where it is now, down at 40 cents. So I can't remember if anyone remembers where we were in or out. Chuck it in the chat. What else we got? There's just a lot of these that they're not, for me, not setting up at all. I mean, just because they're green today, they've been green before. Min ORE was one that bounced. I saw that. Bounced off the low. So a good, it is a zone where you can find the bounce, but it doesn't mean we're going to have this almighty rally. Bounce today like it did, back here, and then get sold off again straight through that support zone. We head back down to say $1.50 or so, $1.20. 5G I was keen on for a while there, and that took me out. Watched it go up here, watched it come back down here, stop out. So I'm happy I got stopped out now, but yeah. Is there anything you want to take a look at? Any other charts or just your macro picture? Everyone's happy with what we're discussing? We can finish up early if you like, no problem. Otherwise, I'm just a bit of a glance through some of these stocks. You can see a lot of them have been sold quite heavily. Was it NWH? Look at Mesoblast. It's a big bounce today, isn't it? 21% today. What's happened today? God, if you're a pharmaceutical company, you probably, to save your skin from a bigger sell-off, you'd want to just put something about the coronavirus, wouldn't you? I think it's big in the US. They're saying a lot of these companies are just whacking out headlines for coronavirus, and they're rallying off the back of it, yet they're doing absolutely zero. They're doing nothing. It was just taking advantage of the, what's going on, because everyone's looking for a coronavirus stock. So Mesoblast could be doing something similar. Who knows? And what's the news? Headline: Mesoblast to evaluate remest, whatever that is, in COVID-19 lung disease. So bit of a headline. It's given it a 20% bounce. So any shorts would have been chopped out of that, whether or not it's a whole lot of longs piling in or buyers piling in. The volume's not massive either. well, 11 million is probably pretty big, but big flush out, news come out, pops, short coverings would be pretty high, I'd say, on that stock. All right, Lauren, let's go over here. Let's get into that. IEL, and that's another one. It's just bouncing from that 16 buck zone. Longer term, yeah, look, that's probably fine. I don't like the fact that it's gapped up, consolidate up here when the ASX actually sell off. ASX started coming from, say, 20th of Feb. That was about when it was up its highs as well. So that's come down with the ASX. You've got, I know what you're looking at. If you're looking at it through here at 16 bucks, and you know me as well as anyone else, I'll be looking for that high low to start to play out because it's below the MAs. It could bounce on. I understand that, but I'm a momentum trader for shares. I'd rather trade momentum, and at the moment there's none. The momentum's down. So if you have it for hard and fast, it does bounce, and you get a good gain up your sleeve, then you've got to know where your risk is at the moment. I just don't see anywhere to put my risk that where I'm proven where buyers are getting in, and you can only see that off a high low. Now that support, that bounce off 16 today was a low. 1596 today. What was that low? 1605. So it took out the lows by, 9 cents? Previous lows of the start of Feb. Took that low out in here, and it's bouncing now. If we buy it, so you just say you buy it here, you've got to have your low, your stop below that. You have to be below this candle. And if you don't want to run a stop, fair bit. But I would put my stop, I'd have to put it below there. But this action here is no proof whatsoever that buyers are taking control or starting to take control even. It's just a bounce like we had back on the 3rd of March. That's a good bounce. You bought it there. The next day you were up for about half an hour probably before you got smashed. Then you had a green candle the day after. That would have been, okay, that's not so bad. And then from 20 down to 17 bucks, a $3 drop. What's that, 6%? Is that right? $3 drop, $1.50, 15% drop from, that day. So I'm just saying, if you're buying here, you don't know what's going to happen. And I think the harder we go down, it's the same as the harder you go up, the higher the chance you can have a good recovery, a big pullback. And also the harder you go down, I know that it gets more and more attractive to buy the dip. But when are you going to say, oh, is this the dip, or is this the final dip? Is this the first dip? We don't know. So I think it's prudent. You can always trade again. If it does start to hold something like this, a higher low, and we can see the few days are spent chopping around here, and then we get someone one day puts in a higher low, then I'll be happy to buy that, because then you know exactly where your risk is, and you know that you're not the only one thinking that price is going to bounce. Whereas if you're buying, say, here, today even, into the close, you're guessing. It's just a pure gamble that this is not going to head south again. It's overextended. There is some big volume on this move down, all through this move down, and it was easing off into support. But if we might bounce back up, and then you get another wave of selling come in and drive it straight through support at 16, we never know. Anyway, we'll see. If it's on your list just to keep an eye on, I'd be looking for some sort of confirmation that it's going to get soaked up, and it's the level to trade off, rather than find out the level to trade off is down at 14 bucks or all the way down at 10. You find out down the track. CWY. I'll have a look at that. Again, a good healthy bounce today. And that weekly chart is still relatively constructive. Let's draw that up, because this is not. We'll draw the weekly chart. Where's my little, so I've just got out my drawing tool. All right. So we've still got this trend up it's still holding, even if that's a flush. We didn't quite get down to this low, and it's bounced. It flushed it out, closed above, held the next couple of weeks, and then we bounced, and we've, another flush here back down to support around 190, bounce back up. This is a key level over that weekly chart. We took that out, a few weeks ago. Obviously, being sold back down with everything that's going on, but it's getting that good rejection on this weekly chart of $2. That's a good healthy rejection there. So for me, if you can see what I'm talking about, that's that level through here. We come off at that level, come back down. So obviously looking for that to consolidate. And I want to see a little minor high low. If you get a little minor high low, it could be a good goer. And if that's a weekly chart, it might be a few weeks till it plays out. I mean, if it just bounces from here, okay, so be it. But that doesn't look too bad. A bit of divergence here as well. I think that's what you call it. But so that weekly chart is not too bad. And then you'd be at least targeting up towards $2.50. So there could be a trade in that one. Looking at the daily, oops, you can see this big flush rejected today. So if we can sort of do a bit of work down here, essentially like we can just see that big flush down, pop back up, that pullback, the first bout of selling again after the flush lower is held up at a higher level, whether it be 215 or 220, doesn't really matter. And that can sit back at the MAs, and then potentially if it breaks the upside again, it could be a nice little trade where you've got your risk. Longer term is up. You've got that pullback, big flush down. It got soaked up, and it's starting to hold a higher level. And then look to buy it, see if it can push back up to these highs at 250. And if it can't, you just have a tight stop. So that's probably about it there, you guys. I think any more questions, anything you want to take a quick look at? Otherwise, we can call it a day. But I think markets like this, just be patient. I think patience is a big key. We're up 65 at the moment, but just up 65 and a few weeks ago was pretty healthy, but after a couple of 1,000-point drop, we'll become off 60 something on the ASX. What's it? 72 down to 58. That's 1,400 points. Yep, 1,400 points. 59-point rebound is nothing, next to nothing. So yeah, all right. If you've got any questions later on, just send us an email to support@tradesetup.com.au. Yeah, and we'll go from there. If you have any issues or something you seriously want to talk about, just send us an email and I can give you a call, or we can speak over the phone. Otherwise, enjoy a couple of days. If you're out of the market, you're in cash, good. There's going to be some bargains to come. But again, just be patient. They will come. They will come. And they'll show up. Even if you have to give up the exact low, it doesn't matter. I'd rather give up the low and get it slightly high, give up a few gains, than to be on the safe side and be when it's rising rather than trying to pick a bottom. That's just me, but I always feel a lot better about myself if I can do that. So anyway, guys, have a great day. Have a good week, and we're back in on Monday. So back to Monday. If you have any questions, like I said, just shoot us an email and I'll get back to you. All right, guys, see you later. Bye.